Hello, and thank you for joining me today. I'm hoping to delve into the future of property transactions and lift the lid on PEXA and the PEXA Pay settlement scheme. I'm Angela. I'm a time-served conveyancer, and I'm currently head of market development for PEXA. So let me give you a little bit of background firstly in relation to PEXA. PEXA originated in Australia, and it originated from a market initiative that really wanted to look to change the way that conveyancing took place there. And as we know, conveyancing is effectively a financial transaction and probably one of the largest financial transactions we'll ever make. It's financial transaction for title ultimately. And yes, there are many factors around that, but that is what it is. So from that initiative, PEXA evolved into a national property settlement platform that is effectively transacting over 100% of lender market today within Australia, and has transacted over 3 trillion Australian dollars safely through that PEXA platform. So around 20 million property transactions are completed, and they're moving around 20,000 families per week that are settling through that. But that is alongside and with conveyancers. Conveyancers are an essential part of this ecosystem and environment, and we'll have a look at that as we go through. So on the basis that they had this success in Australia, it was then looking at how could they bring this to other marketplaces across the world, and looking at markets that were similar. And by that I mean that they ran a Torrens registration system, so a standard registration of title, no need to look at the historical chain of transactions. Now, of course, for those of us who've been in conveyancing for a long time, that was the way that we used to look at it in the pre-registration days, but now it's all about that registration of title. And therefore, because we operate that same Torrens model, it was made sense for them to look at the UK. And PEXA moved over to the UK in 2021 to commit to looking at how we could transform within that space and look at the banking system from that perspective, and the PEXA Pay system within our banking system. So let me just move on to what the PEXA pillars are and give you a bit of background around that. So there's effectively 3 aspects to PEXA. The first of which is the settlement part, which sits at the core of the PEXA offering, and that is a payment scheme within the Bank of England. So it sits alongside payment schemes that we're used to looking at every day and using every day, such as CHAPS, faster payments, BACS, those kind of aspects. Anything that is moving funds from one place to another. Unlike the other payment schemes, PEXA Pay is specifically designed for property. So it doesn't operate in any other space, it is property specific. Clearly, with the other systems that are in place currently, they will deal with a number of different asset classes who are looking to move money from one place to another. And that's the key difference in relation to what PEXA offers within that banking solution. You've then got the lodgement aspect. So there is an integration with Land Registry, which facilitates for immediate lodgement of documents on completion. So no longer have you got that registration gap between completion and when the registration ultimately finds its way to Land Registry. It will occur at the same time. And all of that is wrapped around in a workflow. And that workflow facilitates that, the orchestration layer, if you like, and it also connects into the conveyancer's case management systems, so they've got that full visibility from there. So let me just have a look with you about how funds move and settle. So how it looks today and how it would look in a PEXA Pay settlement position, and what is happening at the moment within the PEXA Pay solution within Remortgage, which is where we are transacting at the moment in the UK. So if we look at the traditional method that we use today to access our funds and request funds, from a conveyancer's perspective, they are requesting funds from their lender, usually to receive that by chaps or faster payments, usually at least 1 to 2 days prior to completion, to ensure that they have those funds in place and to sit them within their client account. They will then wait for the date of completion, and ultimately they will then send those funds on in a remortgage position to the outgoing lender. When you move into a PEXA Pay settlement world, the incoming lenders no longer release those funds. So you don't have that exposure piece, you don't have that position where you're chasing funds, you've requested them, you're trying to find out that you're going to receive them in time, and you also don't have the exposure of those funds being attacked on their way to the law firm. Or alternatively, when the law firm sends those funds out from their account, they stay where they are, but they're locked down. And on the day of completion, PEXA instructs the Bank of England to move the funds directly from the incoming lender through to the outgoing lender. And that happens as a result of the conveyancer stating that those funds are correct, that they should move, and confirming the completion with the lender. So the conveyancer is an integral part of this journey. So let's look at some of the benefits, the wider benefits first. Bearing in mind, PEXA have worked in partnership with Land Registry to look at how we could automate key aspects of the conveyancing process to try and get to a point where the quality and standard of that transaction is heightened. So firstly, there's the early title information check. So this is a matter of the system bringing in Land Registry data, title information, and being able to verify that against the information that has been input by lender or conveyancer, for them to see any discrepancies and for those to be dealt with in the early part of the transaction. So moving away from the vast amount of requisitions that sit around name discrepancies, property address discrepancies, all of that kind of thing. And it enables that to then provide a title information register verification, so you can see how that title is going to look following completion. The next part of that is the PEXA mortgage deed. Now, as we know, there are a variety of mortgage deed templates at the moment by all different lenders, using all different ways of producing that document, which is often leading to errors in relation to how those documents are executed, dealt with, registered, making sure you've got the right one, all of those things. And that is also hindering that automation piece, because all of those documents coming in different ways is creating an issue for Land Registry from that perspective as well. So what PEXA have done is they've standardized the deed template. They've taken the information from Land Registry and from the lenders, and they provided a template which has been approved by Land Registry to provide that solid formation and ensure that all lenders coming through this PEXA route would use the standardized deed and be able to lodge that much more easily and get that approved much more easily. And then we've got that automated charge registration and lodgement piece. So this is when on completion, as it stands today, clearly for a lot of us, the application will then be passed to a post-completion department who will ultimately register that title. This facilitates for an automatic lodgement of that registration. Because of the early information that has taken place, the lodgement is synchronized with the payment. So on completion, when the funds move, so does the lodgement take place to land registry. And you can see how that starts to really secure the position in relation to lender or client risk from that perspective. So let me move on to the benefits for the conveyancer. As I say, the conveyancer is a key part of this. They will be approving the workspace. They will be one of the key parties in the workspace, and they will have the full visibility of what's going on. But they've also got some major advantages. And one of the key ones of those is that the funds are no longer at the conveyancer's risk. Now, as it stands today, conveyancing is seen as one of the highest risk areas in relation to funding and in relation to the attacks that take place on conveyancers because of the fact that we're dealing with so much money. In this scenario, those funds are held away within the banking system and are no longer at your risk. So you can see how that could really start to change the dial in relation to insurability, in relation to no longer being attacked or potentially attacked from a cyber perspective. You've also got the closing of the registration gap. So again, as it stands today, our requirements in relation to registration within the priority period and ensuring that that happens and it doesn't fall between the cracks can create a huge amount of administration and concern and risk within the conveyancing environment. Within the PEXA environment and the PEXA enabled journey, that registration takes place immediately. And by that, I mean the lodgement of that registration. Clearly, there may be requisitions, and we will look at that in a little bit later, but the actual lodgement of registration with Land Registry is guaranteed and takes place at the point of completion. So you can see that this starts to reduce a number of the administrative functions that we have today and provides a much clearer visibility on what is actually happening in relation to the funding. You know the funding's there, you know the sums that will be available, and you'll also have absolute confidence that funding is going to move from one place to another at the time or the day of completion as has been appointed. And it's within a secure and real-time property-specific payment scheme. So it's not a generic scheme. It's something that is going to be surrounding property only, and therefore has all of those feel-good factors around it that we don't see today in relation to when we're moving funds around. And we've also got risk mitigation. You've got a secure platform. It's taking that away from the client account attacks that we can potentially have. You've got confidence in relation to where that is and what's happening. The parties in the transaction can see the various aspects of that. And we're just slowly looking at how that diminishes the likelihood of claims in that arena. And ultimately, the result of those things, if those efficiencies are there, if that clarity is there, if that visibility is there, it starts to create or recreate capacity within the conveyancing operation to enable you to concentrate more fully on those things that we came into the industry for: advising your client, ensuring that the title that they're looking to buy is appropriate for what they want, and just really trying to sort of elevate to that trusted advisor position. So, as I said before, since PEXA have been in the UK, we've been concentrating largely in the high level remortgage space because it made sense in order to test and ensure that the capability and the facility worked within our jurisdiction. And that learning is enabling us to move towards the launch of sale and purchase later this year. And this is where we can really start to find some real excitement around what we could actually change and how this could impact on the experience that we have today, which often is not a positive one within conveyancing. So how does this look and what are we going to do? So we've got this PEXA Pay scheme that is already in existence within the Bank of England and is transacting within the remortgage space. That starts to spread into the sale and purchase side. It's standardising, because we've got all of that standardisation of documentation, of title reference, of how the funds are going to move. It's a collaboration, because all of the parties required to complete the transaction are all in one digital space. They have that transparency, that real-time visibility. They can see what's outstanding, and ultimately when everything is ready, that workspace is locked down and everyone has the confidence that those funds are going to move when they're required to move, and ultimately the application for registration will also be lodged at the same time. We've got no holding of funds, so we're taking that risk away in relation to how that exposes us as an industry and as a conveyancer. And there's initiatives already underway with PI insurers where they have already said that if you remove the risk, then the impact has got to be that will have a knock-on effect in relation to premiums, and where conveyancing sits in relation to the risk appetite for insurers ultimately. And this results in a much better customer focused experience, where from the conveyancer perspective, as the customer, they're in a much better position to be undertaking the work that they want and wanted to come into the industry to do. They're able to deliver to their clients a much more relevant service to the time and place we're in relation to society, and they're also able to deliver a much more certain and visible experience for the consumer. So all in all, it's just really looking at how we can look at our financial transaction as is today, look at conveyancing, and really look at how we can change that and move it to a much better experience for all, and ultimately to retain conveyancers within that space who have felt maybe for a long time that it really is getting to a point where it's just way too difficult. This could really alter the dial on that. So what I'd really like to encourage you to do as a final point is to sign up for our industry updates, to look at how we're moving forward, how we're working with all of the industries to really deliver on our aim and wish to really change the conveyancing process and use our smart process to provide a seamless and secure solution that enables us to really start, dare I say it, enjoying conveyancing and making it into a much more positive experience. And as a conveyancer myself, that would be a fantastic finish to where we are and what we're aiming to do. So thank you very much for listening. I hope that's helpful. Please do keep in touch via our newsletters and see what's going on, and let's look at what we can do to really change the dial. Thanks a lot.